Hey everyone, my name's Andy. I got Scott with me. I'm from Finding Value Finance. He's from Stone Reap Capital. We're just going to start recording. We're going to talk about uranium. I guess probably more of a uranium specific video is what it's going to turn into. So we're just going to kind of go back and forth. And we were just talking kind of normally, like Scott was the gap up in one of the stocks. He did some panic buying. I tried
I
getting in
did.
something and it gapped up and it got away from me. Hopefully it's not the stock that got away.
I know.
But so what,
It's
Scott,
frustrating though. It's
what's
frustrating.
going on today? Like what's with this huge gap in uranium? Like any explanation, or is this just money flows?
I think obviously there was the news around Japan and India yesterday. So like what apparently one of the biggest power generators or power plant companies in India, like they apparently have massive plans to build nuclear power. And Japan basically says we need to like really build nuclear. we need to build more power plants, and we need to restart them at ASAP. So I think that was the trigger. But I mean, like literally, we could have got that news and still got negative. Like, I mean, you just don't know, right? So, but anyway, like, I mean, I am happy, excited, and really frustrated at the same time because, as you know, Andy, I said in your last channel on Monday this week, I was like looking at some of these charts, in particular. Okay, this is the reason why I panic sold my precious metals, because I saw these charts. I was like, this is ridiculous. This is like free money. And so I was panic selling to panic buy into uranium. I'll show you this. And this was what really got me to sell the PM, because I was like, this is sitting at, so this is 92 energy, right? So obviously this is the IPO price. And I was looking at the price right now. They made probably one of the not financial advice, but they made probably the best discovery this uranium bull cycle, right? So they've actually just announced the news today, this morning, saying that they've hit 6 meters of 2.1% U3O8, which is, for me anyway, like I'm not an expert or anything like that, but for me that sounds amazing, right? So I was like panic selling precious metals on Monday because I saw it drop like this. I'm like, oh my goodness, I need to get this. I need to buy. I think
So
I saw it go red down here.
you can draw a trend line across.
Oh yeah.
That's how the trend line on the bottom there, the entire way.
Yes.
And that's what
Oh
I was watching.
yes, exactly. And Andy and I were talking about this for a while. So I drew in a bunch of things here. Like, I mean, I was like, I sold it as soon as I saw it pierce down here. I'm like, okay, I need to get rid of my PM. I need to get into this. Like, I need to pile into it. And then I panic sold my PM because I wanted to panic buy into this. And then the money didn't come through until yesterday afternoon, and I was like so busy at work and like in meetings and stuff, and I missed the fund coming through my account, so I missed yesterday's buy. I'm like, oh my goodness, right? And so anyway, so I saw what happened last night. I was like excited at the same time, but also like really disappointed because I could have got in yesterday afternoon. And if money had come in earlier, I would have gotten in like Monday, Tuesday. But anyway, regardless, the breakout is just insane, right? The breakout that we've seen in U.UN. And I've been
So
highlighting this for a while.
we got massive volume today. We saw gigantic moves across the
Oh,
entire sector of uranium, like just
this
massive
is
everywhere. And one thing I want to make a comment on is a lot of people were thinking this was a head and shoulders top. A lot of people. How come we didn't think that? Why? How come we didn't? Why?
because this is the leading pattern that you like, Andy. Like, I mean, across the board, it was the leading pattern. It's not a head and shoulder pattern. This is like the most bullish pattern that you see. And the leading pattern basically is this pattern where it goes sideways, it comes up, initial move up, goes sideways, sets a really strong support area, goes up, comes down,
In an
it
ABC
pierces
correction,
slightly below it, which is mega bullish, and boom. This is the pattern that we saw when we got into LEU, right? So it's interest energy.
Yep.
So this is exactly the pattern. And so here, as you can see, base, go up, go down, comes back down, slightly pierces through the previous lows, and boom, right? So we're like, this is not head and shoulders. This is like the leading pattern you see absolutely everywhere. And this is like one of the most bullish. And I think this together with 200 weekly moving average. If you have those two patterns playing out on your chart, you just have to pile in. And that's what I was thinking. Like looking at these charts, I was like, this is it. Like, and if you look at centrist energy as well, Andy, look at this. This is a beauty. Because, oops, sorry, let me just get rid of that. If you look at centrist energy,
Scott, I see your mouth talking, but all I see is boom. I just had to say that.
I was walking around this morning in my house alone because everyone's out today. I was just like, keep going, boom, boom, just myself. But at the same time, I was like, damn, like, I mean, I could have seen my money coming yesterday and bought before the market closed. And like, the meetings yesterday that I had cost me a lot of money. I can tell you that. It cost me a ton of money. But, but
you're a good investor when you go to work and work causes you to lose more money. It's so bad sometimes. I understand.
This is like, I've lost a ton of money by going to work and having all those meetings yesterday. But anyway, look, yeah. So you've got this, and I've been working all day, all night these days. But anyway, but you've got the weekly moving average that's coming up, and then you retest it together with that leading pattern that we showed you, and that is, I think, from what I've seen, this is like the best time to buy, like around this zone. Like it doesn't even need to be perfect, right? Just anywhere around here, it's the best zone to buy. And we were seeing this, like we were, Andy, like, I mean, when we record, let's be honest, we are much more conservative than we are when we were off camera. Like we were just like,
last bull market, I noticed some of these patterns that would always show up, and I call it the lead-in pattern. I don't know what else it is. It's a lead into a larger move. And I showed Scott one.
It's like, what's in your background, Andy.
Yeah, it's cheetah afterwards. So I showed Scott like a while back. I showed him the pattern, and I don't know if it like fully sank in. And then he started looking at all these charts, probably like, what the heck is he talking about? Then he started seeing it in like the previous bull markets. He started seeing it more often. Then he like got back on like he was all giddy, and he's like, Andy, I know what you mean by your lead-in pattern. I'm like, what? I showed it to you. And he's like, no, look it. It's right here. It's right here. It's right here. I'm like, he's like seeing it everywhere. And I'm like, I know, I see it. Like I'm going in like no other. Everyone else is calling this thing like a head and shoulders fake top pattern. And I'm looking at it like, this is the lead-in. Do you have a example of that lead-in pattern in like an iron ore company or a silver company of last bull market, whatever your favorite one is, that for, is it like for test or for two or whatever it is?
So this is what I had messaged Andy to demonstrate how well this pattern works. This is what I sent Andy. I mean, I didn't get this because I just don't. I mean, I'm so like hyped up about uranium that I can't really get into any other sector right now. But this is IPI. So I've sent this to you, Andy. This one has the pattern, and that was 11th of August or something. And this is IPI, right? Intrepid Potash, and we know like Andy likes it. And boom, this pattern, I think, and together with, once again, 200 weekly moving average, worked as resistance, came up, now support. Like this is the best pattern out there, I think.
So the pattern, what this pattern is though, if you were to kind of like understand what the pattern is, it's a buildup of energy. So basically you've got like a peak, it comes up and it like sits for a little while and goes sideways. Then it breaks up, it comes back down because people are still in disbelief of this rally that's coming. People go short. I don't know. They go short. They think it's like this head and shoulders pattern. Everybody gets short. They think that the inflation's done. They think that we're going to go into recession, X, Y, Z, whatever the reasons they have. We come back to the support level, and I'm buying it because we've got support right underneath us. And sometimes I mistime it a little bit. Like sometimes I buy a little early and it comes back down a little more on me. I'm just always early. That's just the way it is. So I cost average in, and then all of a sudden, like the shorts get squeezed, and they're like, "Oh crap, we're still in it," and then it reverses on them. And I just see this pattern all the time in a whole bunch of different commodity companies before like a massive move comes. Now, I'm not trying to hype everybody up. We still got to be calm, stick to the rules, don't be FOMOing in and all that stuff. But there's the pattern. There's the pattern of last.
This is the pattern. This is unfortunately this was a small holding for me, and this is the one that I dreamt about before. But I saw this like coming up. Like all I saw really was it's forming like some kind of arc, and I was like, this is a good entry point. But now what I see is what you've been telling me, which is that lead-in pattern. So you go up, lead in, boom, and then you come down
in slow motion
low to this level.
The important thing is you go up in a very fast pace. You slowly leak out the sellers back to where the support level was, and then it's flip it, turn and burn. That's it. That's the pattern. And SM Energy had it when it took off. That's how I knew I loaded into it.
Yes. and this, unfortunately, this was not a core holding for me in that, like, I've got a bunch of core holdings and I buy a little bit of what I like. But this was like the quickest. Like, I mean, I think I did 3-4x within a period of like 3 weeks or something. Like, this is amazing in terms of pattern wise. And once again, not financial advice, but this is the one that I had to just buy at market at open today. Because Andy, look at this. Does this not have, and that's me, but does this not have that pattern? Like, look at this.
Because what you want to do is you want to look before the move and look at all the support underneath it. So your risk reward is the best where you've got the most amount of support. So if you're sitting on support, it gives you something to jump off of. And it's got the support, yeah. 100%. And you can see it in multiple stocks. Well, you can see it across a whole bunch of commodity stocks right now.
And this is the pattern.
This is the pattern that I literally scavenge across all of the commodity sector, and then I share it with all the members on my website in the description link below. That's the platinum members, and I'm trying to like teach them and show them, and you gain that confidence where you're like, wow, this pattern, like it's even given you, I think, more confidence. As you see the pattern, you get used to it, you understand it, you know where the support levels are, and it's like, man, this thing is
this thing is
hopefully it doesn't make you feel invincible. I mean, that's not what it's supposed to do. You still need to follow all the strategies that you have, position sizing,
100%,
making sure you're not getting too aggressive, and don't use margin, and don't do anything over the top. But
stupid.
But we're seeing these patterns across uranium and commodities, and it's looking very good. It's looking
very good because this pattern also, what I found, if you look at the last commodity bull cycle, is that it's the pattern, it's the bear trap pattern, in that what I mean by that is it's the first stage of the bull market, like really early stages of the bull market, where this pattern forms. I haven't really seen it form in the later stages of the bull market, or even the middle of the bull market. This is the first pattern that you see in a bull market. And I shared with you this earlier. And this is the iron ore company that you talk about, which is Fortescue Metals Group.
Yep, that one.
This is the leading pattern, right? Go sideways.
Yeah, it's the ridiculous pattern that gets everything going. That's the one that you showed me after you saw the pattern. I don't think you knew what it was. Then you saw it, and then you're like, look at this. This is ridiculous. And then you're like, look at this one, look at this one, look at this one. I'm like, I know. Like I know what you're saying. I'm like, I'm seeing it everywhere right now. And then I showed you on the other some of the uranium stocks, and you're like, oh, I'm piling in. Yeah, I think you also, when I was looking at some of this, we were looking at the genetics of the stocks. That I call it the genetics or DNA of the stock, which is your fractals and your 100%. Fibonacci sequence and stuff. And that's where you get those big extended pieces. So basically what Scott and I are doing is we're scavenging the entire commodity area. We're looking for particular patterns of lead-in where the human psychology, these patterns are created by humans interacting with each other. And they form over and over and over on different time frames and on different scales, or we call it fractals. Those scales are your time frame. Like you can get a short time frame, a long time frame. We want to see them on like a massive time frame on a big fractal. So what I do is I look at the fractals, and usually the fractal is like the genetics of the move. The bigger the fractal, usually the bigger the move after the fractal. So I'm scavenging basically the entire commodity area to find large fractals with patterns that we've seen before, where human psychology gives us kind of, I call it the lead-in pattern for a gigantic move to come. And what people get wrong is I position so early that a lot of these I position before the entire I'll call it pattern or this fractal that develops. I was so far in, so I had to ride up it, I have to ride back down it, and then we have to go. So everyone's like, well, it's going to go down. I'm going to try to time the market. I'm going to try to do all this stuff. It's like, guys, just it's coming. Like, I just don't think that's the right move. It's not a head and shoulders topping pattern. It's not what most people think. And they're not tying it to ratios. They're not tying it to the market conditions. If you don't do that, you're going to get, you could get slaughtered if you try shorting this stuff. But as long as you've got the ratios in your favor, your risk reward is favored and skewed to the investor who knows this information. And again, I'm going to go back. I show all that and all of this kind of background information on the website. And Scott and I have talked about it many, many times. I think he's both of us are getting more, I'll say, we're getting more fluent at seeing all of these things and a lot more confident in, you know, the patterns. And obviously we use ratios and all this other stuff. So everything that I look at points to a bull market in commodities still. And we've broken all these downtrend lines across the entire commodity sector. Everything, like precious metals are breaking. Uranium's breaking, oil's breaking, natural gas is breaking, copper's, we've already broken the downtrends. Copper, tin, aluminum, like everything. What we did is we broke out of a basing pattern. We broke out, and now we're coming back and doing a retest of the breakout in a lot of these commodities. We form that pattern, and then boom. Now, I don't know if you can pull this up, Scott, just because you've got it all up there. What about pulling up Bitcoin and seeing, do you think Bitcoin has that pattern of the lead-in before the big move? So if you go before the big move, does it have that lead-in? I think it does.
It does. It's got this, but it didn't. And this is where it gets a little difficult in terms of timing. You can never pick the bottom because you saw this leading pattern here. And I mean, if you expected it to come down to test the bottom of the channel, or bottom of the support here, you would have missed out. Which is why Andy and I just like, if the fundamentals are there, if the market conditions are there, you just have to just keep biting, keep biting at it, right?
So yeah, I think that's the lead-in. Well, that's one of the lead-ins. I think it actually happened before, before September. There's two lead-in patterns there. I think there's one even before it, and then it's amplified very large. That's the problem. Here, scroll it back down a little bit if you can, and then go at a bigger picture, zoom out. So, and keep zooming out. The lead-in, I think, is on the left-hand side there, on the far left. There's your, that's that move up is your lead-in there. And then the size of that entire pattern, because it's so big, is your move higher. And right now, yep, that's the pattern there. Yep, right there. That's the whole thing. Yep. Because I saw it on Bitcoin, and then I took that pattern on Bitcoin and I projected it against other. There's the other lead-in pattern before. It's a massive everywhere one in Bitcoin.
This is absolutely everywhere. And if you look at, like, even, I think I saw a lot of it on Monster Beverage as well. Because obviously this is like your best performing stock in the last decade or so, right? I mean, this just went on a tear. Like, it didn't even come down to retest any of the support. And that's why like you can never pick the bottom, because like the fundamentals for uranium is just so incredibly strong. Like, I really didn't expect to see these level of prices again. And like when I saw it come down to these support levels, I'm like, okay, I like precious metals, but this opportunity, like if I just sat there and like did nothing about it, I think like in a couple of years time, I would look back and just massively regret, because I think the difference between what physical precious metals can do in terms of the returns versus uranium stocks, I think there's a massive gap, like between how much of a return they can potentially provide. So like, I mean, precious metals, for example, I'd be looking at max, I don't know, 5x over the next couple of years, maybe. Like, whereas with uranium, like, sky's the limit, literally. I don't want to say a number because
I'm still diversified out. I still have my precious metals holdings. That's me.
Oh yeah.
And I
do too.
I don't, I think uranium of my total portfolio, if I were to add it all of like my net worth and everything, it's probably like 10 to 20% of, maybe 10% of my net worth. Maybe a little more, maybe 10 to 20, something like that. I know some people
that's only because your natural gas have just gotten skyrocketed so much, and because cost base, it would be a lot higher than that, right? Because natural gas just like massively went up.
Yeah, so a lot of my natural gas holdings and oil holdings went up massively, and some of those positions have gone up, like way gone up, and
crazy.
Some of my uraniums, I mean, they were hanging in there for a while. Bannerman did pretty well, and some of these other ones, but yeah, it's natural gas went ballistic. It's kind of, yeah. But I'll be honest, guys, I was kind of waiting for natural gas. It was like on a T for me because I was just waiting for it to come down, and I don't know. There's part luck. Getting is the entry points that I got. It's part luck. I mean, it's not totally skill, even though it's a lot of skill, but you still have to kind of be brave and basically run against the herd. And the herd wants to, basically stomp on you and tell you you're wrong every second you hear, listen to them. And I don't know. I just don't. It's been beaten out of me. I just do whatever opposite of them, the herd.
Yeah.
So what else, Scott? Like, what do you think we're going to get a pullback after this, or do you think we could potentially just rocket higher? Like, what? I mean, obviously we don't know the future, guys.
I don't want to guess.
We're not predicting the future here. We don't know the future. But do you think we're going to just rocket higher? Do you think, maybe another day or two and then the pullback? Do you think?
I have no idea, to be honest, but I don't care, because I think we're so like still, this is an incredible price level right now to be getting into, because as I said, we're so early in this bull market. So this is the 200 weekly moving average across like so many uranium charts right now. It's just started turning off, right? Which means it's just started changing its long-term trend, and we're coming down to retest it. And as we went through last time, Andy, and you can see this, okay, maybe Apple chart. Let me see. So the question really is, right? The question really is, I mean, Apple chart didn't even test it here, but let's say the trend really changed, and this is the first step for Apple, right? And this is retesting your, and you've got the leading pattern again here, Andy, this leading pattern. But let's say you got, I mean, some people bought the absolute top, right? Some people did. So let's say you bought it here. And, we try to nibble a lot around the 200 weekly moving average. And let's say you bought it here. But I mean, you can just continue to go up like Apple did. But there are plenty of other charts where it just goes sideways for a long time, hugging it, right? So you can't guess that. I don't think you can guess that. But all I know is that we're still in a pretty solid accumulation zone. I think it's still cheap. A lot of stocks need to still do like 300, 400% just to get back to its 52-week high. And so I think this is a massive accumulation zone. And to be honest with you, like I don't care. Like, I mean, I don't care if I buy here or down here. I mean, I know that I'm not going to pick the bottom. And actually, if you read all the books written by famous investors like Philip Fisher, Peter Lynch, like even Jesse Livermore, I think, and Howard Marks and all those guys, one thing that you say is if you really like it, just buy it at market. Because the worst thing is like trying to get like a slightly lower price and missing out on the entire run. Like, so say for example, if you really like Monster beverages, which you did, Andy, like, I mean, it doesn't really matter whether you pay 20 cents or 23 cents at the end of the day, right? So, I mean, if it does 100x, and if it's a difference between say 80x and 100x, I mean, the most important thing there is that you have a position. And that's what I feel like right now, that I don't know if there's going to be a pullback. Maybe there will be, but the most important thing for me right now is that I've got adequate position in these stocks because they're not expensive. They're cheap, and we know what's coming in terms of nuclear power. So I just want to be positioned in them, sit in them, and just wait for the parabolic move.
Yeah, the way that I handle that is I cost average in. I try to time the bottom, I'll be honest. I try catching falling knives sometimes, and sometimes it works, sometimes it doesn't. But if you can identify where your support levels are at, I try to put a bid somewhere at like support levels. I'll put one at the top of the support level. I'll put one at the bottom of the support level, and in the middle or something, and then they come through and hit it. So
that's what I do.
Yeah, that's where I've been buying, is on those support levels and trying to get the best price possible. So I kind of just, I don't know. That's the way that I've been doing it. And then in way early, like in 2020, everyone was just totally fearful. And if you want really big gains, you have to buy really cheap, and it's really, I don't know. Everyone tells you you're wrong, and that's probably the hardest thing. So I don't know how you can do it if you don't know much about the markets, because people are just going to continually tell you you're wrong. You're going to have people like Cathie Wood, who was at that point kind of like a star because she made so much money, telling everybody that oil's never going to go over $15 or $20 again or whatever, and that it's completely dead. And then, as you can see, she was off by probably a 0 or something in her prediction. It's probably going to 200 plus. And I came out on the channel, and I don't know if you guys watched some of my older videos. I said I think she's wrong, and it's going to go over $200 a barrel back in 2020 at its lows. And then my whole thesis was, or not thesis, but the way I thought about it was, when oil goes to the negative side, they're going to cut back so much on oil that it's going to create a problem in the supply side, and then demand's going to come roaring back, because the demand was not killed by weakness in the market. The demand was killed by a stoppage in the market, not weakness. And we were in the expansionary phase of real estate. I was like, this is the biggest opportunity I've ever seen in my life. So I basically am doing what Scott's doing, and I panic bought everything I could in natural gas and oil and those types of companies. I bought you a bunch of uranium too in 2020. And I'm not saying like this is like, it's not a big deal. I still think I think uranium's probably still one of the best valued areas or sectors in relationship to everything else that's out there. I also think precious metals looks really good too. People really don't like precious metals. They continually say that it's horrible, it's bad, it's never going to go up. Why does anybody buy this, CRAP? Like, they just keep going and on about it. And I'm like, well, if that's the sentiment, I'm going to take that other side. And now it's just a game of patience. At least for me, it's a game of patience. You buy it when everybody hates it. You get in real cheap. And then you know what everyone's going to do? They're going to look back and say, how come I didn't buy it back there? How come I didn't buy it when it was way down at that support level? How come I saw the pattern? I didn't buy it when it was, coming back down right there. It's like, well, I'm doing it. And I'm telling everyone I'm doing it. I'm telling on the website, telling on the channel and all that stuff. So hopefully you guys who are listening are learning something at least, because that's kind of the whole point of the channel.
Yeah,
What do you think, Scott?
Andy has like amazing picks. Like your stock picks are. I was telling my wife the other day that your stock picks are just like ingenious, like just amazing stock picker. So,
What makes you
if
think?
you haven't signed up to his website, I mean,
Well,
I
what
mean,
makes? I know, I know, I've shared a lot of picks with you and stuff, but what makes you think that they're amazing? Like, what? Why? Like, of the ones that I've shared with you and whatnot, which is a lot. Why are they so good? What makes them good? Like, in your opinion, like, is it my approach? Is it
I
the
think it's just
ratios? Is
like
it
yeah, it's the
the
ratios,
patterns?
it's the valuations, it's the patterns, the fractals, the potential gains because what the charts are showing. And like some of your picks are like so undervalued right now. Like I mean outside uranium, like I can't
Fundamentally,
really justify because I'm such a big uranium bull. I can't justify still like getting into some of your stock picks, but because I just have to get more uranium right now because I think this is the most undervalued sector right now in terms of commodities price. If you look at it against everything else, whether it be oil, natural gas, gold, silver, whatever, platinum, maybe platinum's like kind of there, but the trend is in favor of uranium right now. But if you look at it against every single asset out there, uranium is like by far the cheapest, and it's like starting to try and poke its head out, which is why I think I just have to be positioned in uranium. I can't. I always think about like maybe getting into some of the stocks in other sectors as well, but I'm like, nah, uranium. Gonna be in uranium.
so I'm gonna ask you a couple questions here, and it's about uranium because I know some people may want to know this. I kind of want to know too, at least your opinion on it. So here's the I'll give here's the short little question or background on it. We know that a lot of us investors, we look at the companies in uranium, we value it on a dollar per pound basis. We know that the African companies are on the cheap end. Now, my question is, last bull market, what was on the expensive end at the end of that bull market? What was on the expensive end at the end of the last bull market on a dollars per pound basis, of like which areas? Like, is it Namibia? Is it Canada? Is it USA? And if you don't know the answer, that's fine too, or maybe you do know the answer. What went to the most expensive dollars per pound? And or I'll ask this maybe a little bit different, because this is what investors really should be asking is, what companies made the largest dollars per pound difference during the last bull market? Which areas?
Yeah, no. So for me, the craziest thing right now is that there's huge disparity between African plays and Athabasca Basin plays. So, like, let's say for example, your typical developers in Athabasca Basin is trading at like over $5 per pound, right? So I think Denison Mines might be around that mark. I haven't really been paying a lot of attention to those Athabasca Basin developers. All I know is that they are much more expensive than African plays. But in the last uranium bull cycle, actually the per pound valuation in ground per pound of uranium price valuation was similar. If you look at the last bull market, there wasn't a huge disparity between the Athabasca Basin plays versus Namibian plays. And so that's why right now I hugely favor outside those, some of my favorite explorers, which I think could be lottery tickets basically. Outside those, like that's why a majority of my holdings, especially the developers and producers, are in Namibia right now. Because I think so if you look at Bannerman, for example, let's say last bull run, Bannerman was trading at $20 per pound in the ground when they had 27 million pounds of resources. Paladin Resources, I think, was also trading at somewhere, they were trading at really high price. I think somewhere around $25 per pound as a producer. Chemico was trading at $8. So Chemico, I mean, they had like contract issues in that they've contracted out quite a lot of their production at like very low prices compared to the spot market back then, which might have, and people talk about the valuation of Chemico. Let me just touch on this. People talk about the valuation of Chemico and the market capitalization of Chemico back in the 2000s as if that is the benchmark. But that shouldn't be the benchmark because Chemico is making it pretty loud and clear. Obviously, they've got, certain contracts fixed at pretty low prices, but they're making it loud and clear that they're not going to contract out Like they're not going to make the same mistakes that they made back in the 2000s. So the valuation of, for example, the forward PE ratio on Chemical is going to be vastly different this time around than last time around. So I think people just need to remember that. And when we talk about Chemical going to say 150, 200, whatever it might be, and like doing 10x potentially, not advice or anything like that. People think it's crazy based on the last bull market's valuations, but you've just got to understand that the potential earnings for Chemical's production this cycle is far different to the last cycle. So yeah, I don't think you can simply look at the dollar per pound in the ground. So if you look at, say, for example, like Niger and Botswana last cycle as well, I forget exactly which company. I think it might have been like ACAP Energy. So while Bannerman was trading at $20 per pound, Deep Yellow, for example, they had no resources, no reserves. They were trading at 650 million market cap, and their core asset obviously was in Namibia. So Namibian explorer with no resource could be trading at those over $500 million valuations. So this is where I think Namibia, and another thing, political interest this time around, geopolitical risk, I think means Namibia will be favored over Athabasca Basin. And the reason why I say that is Namibia is neutral in terms of their political play. So they're not enemies of China. They're not enemies of the US. And so anyone willing to buy uranium asset can kind of put a bid in for Namibian assets. Whereas, obviously Canada, being closely tied with US, they don't have that. They can't bring in interest potentially from China. Less likely anyway. Less likely to bring in interest from China, Russia, obviously, and other countries. Korea, all those countries. So, actually, Korea might not be so. But so this is where I think Namibian place, the African place, I really like. So the developers and explorers in Namibia, I really like, and I would say a lot of my positions are there. The other jurisdiction that I'm really starting to like and take interest in is the US, obviously, for obvious reasons, that they've made it very clear now that they've got interest in nuclear power. So, and the reason why I kind of got into OKR today, and I need to do a little bit more research. I mean, it's almost my core holding now, almost, not quite. It's like kind of like mid holding, I would call it. But the reason why I've taken interest in Okapi Resources, for example, is because they've got, and I need to do more research. I need to call up the CEO and maybe talk to him. Maybe I'll do it on my show or whatever. But I need to understand the jurisdiction that they're in terms of, permitting, licensing, and all that. But they've got an asset in the US. And I think the US assets, unlike the last time we've seen, because the US assets, if you look across the US assets, they are normally smaller in terms of size, in terms of their resources and reserves. And you see a lot of them that are like 20 million pounds, 30 million pounds, 50 million pounds, and things like that. So they're not huge in terms of resources and reserves. But I think they could get a valuation that is far higher than everywhere else, just because of the country that they are located in. And because of US, the United States interest in securing domestic supply of uranium and nuclear energy. So yeah, I mean, yeah, my favorites to summarize is Namibia right now, for obvious reasons. I think undervalued, safe, and I think they can get bids from pretty much the entire world. I like the US, and I like explorers in the Athabasca, because I mean Athabasca, if an explorer hits there, it could be very high grade uranium, and it could just skyrocket. So they're the ones that I like.
What's important there is we're talking about dollars per pound, and in an explorer, they don't know how many pounds they have. So if someone comes and they're priced at, I'm just going to make up a number, 20 million market cap. So you have a 20 million market cap, and then they find 50 million pounds. And let's say normally in Athabasca, they price it at, I'm just going to give out a number, $5 a pound. So it'd be 5 times 50 would be 250 million pounds. 250 million pounds divided by 20 is like 12, 13x, right? So you get a 12 or 13x, and then there's going to be some sort of premium potentially, because there's going to be excitement on it. It depends when they find it, when they release the news. So it may even be more than that. You don't know. So that's the valuation, or that instant value that's created as a deposit is defined. And what we're speculating on in some of these companies is that we know they've, I'll call it, drilled a straw hole down there, a core, yanked it out, and they said, hey, we got something down there. We just don't know how big it is. So we're speculating that the size, we know they have something, we just don't know the size of it.
Yep.
And usually that's the least risk, is when they're yanking out cores and they've got a bunch of high grade uranium in there. They're going, hey, we got a bunch of this. It's pretty thick. We just don't know what the deposit size. So they get this straw hole that comes back. They punch through it. They bring it out the core, and they're like, well, it's this, this much in there. We just don't know what the size of this big deposit is. So they're trying to basically define what that deposit is. And once they come out with those results, then hopefully it's coming out at the time that the market is positive and everyone's FOMOing. So then it just goes ballistic.
And yeah, and with Athabasca, I think I probably forgot to mention the positive is that, the recent acquisition suggests that, the bigger players are actually, I mean, there was a bidding war between, I think, UEC Corporation and Denison Mines, for example, over UEX. And yeah, that basically shows us that there's going to be an interest by bigger players to acquire these assets, because they don't have unlimited supply of uranium under the ground too. So if they've got the expertise within the region, they might look to acquire at a pretty handsome level. And that's what we saw with the Hathor's Rough Rider. I forget the exact figures, but I think it was in 2011 or 12, something like that, during the bear market. So Heather Exploration's Rough Rider deposit, for example, had 50 million pounds, I think, in total resources and reserves. And that was bought out for just over $10 per pound in the ground by Rio Tinto, I believe. So that's an example of how much they can actually go for during a bear market. Another example in Namibia, which was actually acquired. I mean, I've talked about the extract resources, Husab mine that was taken out by CGN Mining, so the Chinese nuclear company. That I think that was also 2012 during the midst of the bear market, sitting right next to Bannerman. Sitting right next to Bannerman Energy. They were bought for about $5 per pound in the ground during the bear market. So it's not a huge disparity. So if you say, let's say they both go back to the previous 2011 valuation, for example, from these price levels, Bannerman's trading at, say, $1 per pound in the ground, right? So to get to $5, it needs to do 5x. Denison, let's say in the Athabasca, you've got the same asset, but right now, let's say they're trading at even $4 or $3. To get to $10, you're only doing 2.5x to get there. So that is the difference, and that's the leverage that the Namibian players give us, I think. And another interesting acquisition that was also completed in Namibia back in 2007. So this was, during the bull market, and was a pretty huge acquisition. I think Areva bought out I don't know how to pronounce it. Uranium. So Uranium was trading at in 2007. They were trading at $3. It looks like $3 per pound in the ground, with about 235 million pounds of underground resource. So they didn't have any reserves. It was like, and the difference between resources and reserves is that you need to drill a lot more holes and spend a whole bunch of money to move from resource, which is like a guesstimate of how much they might have, to indicated or measured reserves, which allows you to then do proper pre-feasibility studies and DFS and all that to move to the next stage, which is production, basically. So they didn't have any reserves. They only had resources, which was a guesstimate. So they had 235 million pounds under the ground. They were bought up by Areva for 2.5 billion cash offer. So they were suddenly revalued to pretty much over $10 per pound in the ground. So they are the type of valuations that we can expect to see if we were to just repeat the last bull market. Now, the fundamentals for nuclear is so much better than the last bull market. We shared with you multiple times how we had excess supply in the last cycle that came from basically World War II. We don't have that. We don't have the secondary supply. We've got overfeeding. We've got massive supply deficit. We've got China, India, Japan, Korea, like Germany, France, everyone trying to restart or build nuclear power plants, and the market conditions in terms of liquidity is just unbelievable. So I think we're gonna go we're gonna go way exceeds last bull market, which means Namibia, for example, assets, and take for example, those ones like Bannerman, like Deep Yellow, for example, and it's not financial advice. Let's say they complete, they've got reserves over resources, so it's gonna get valued higher than Uranium, who only had resources. Let's say they've completed DFS, PFS, DFS, and they've got like production, pretty much all ready to go. Those pounds in the ground will be worth way more than what uranium was worth back then, having just started drilling and having just kind of like estimated a resource base. So combine the developers and how far they've moved in terms of their development, in terms of moving it into potentially trying to move it into production, combine that with unprecedented market conditions for uranium, demand supply picture. I think we're going to see a far higher valuation than 2007.
Do you think it's a fair statement? If I make this statement, I'm gonna say, so if you were to stand and let's just say this is the line, if I look back into time, we are basically coming from a surplus of uranium, surplus inventory all the way up to 2020, let's say 2020, and then we're looking forward. So we're looking forward this way, not backwards. A paradigm, a shift in uranium where we came from an inventory surplus and now we're entering an inventory deficit. And that deficit really has never been seen in the markets before with uranium. I mean, other markets, sure, but never really in uranium like this. Is that a fair statement?
That is a fair statement. Because if you look at, I can share this with you again, because I think this is a fascinating chart, because we've never seen it, Andy. We've never seen this.
Well, I know I'm saying it for everyone else. I have my opinion.
I know, but like,
I mean, I want to make sure everyone understands that the way that people are viewing it, when you come from a long period of, say, declining interest rates, or you come from a long period of oversupply, people think that that's normal. What I'm trying to tell you is, or what I'm trying to say is, as we look forward, things may be different here. Demand and supply may gap on each other, so to speak. And we've never seen pricing of this asset undergo those types of conditions before. Remember, prices are a function of the market conditions, or prices are a function of what people perceive the market conditions to be. So what I mean by market conditions, I'll just give you an example. Water is worth nothing if you have a surplus of water, but water's worth everything if you have no water, right? You will pay anything for it. So the conditions are vastly different. So what I'm trying to describe here is, when you look backward, we're coming from a surplus of uranium where we've got abundance of uranium. They're decommissioning missiles. We've got this stuff everywhere. Now, when we look forward, all of that inventory is getting worked off. We're running deficits, and we're now going to overfeeding, which means you have to give the enrichers more and more uranium than what you usually would do. You've got all of these market balances in the future between demand and supply that are going to throw the inventories and eat them all up. And at some point, people are going to say, well, where's the other inventory? They'll be like, I don't know. I don't know where this inventory is at. And that's what the problem is, because you can't get these mines online very quick. And I think there's going to be like this gap between having uranium and being really, really tight for maybe a long period of time.
Yeah, 100%. So, I mean, if you look at this chart, this is like what really gets me. And I don't think, I mean, people compare uranium bull market this time around to last time, but I don't think it's comparable. And the reason why I say that is, like, this is like uranium that's been built like since World War II and stuff. That's excess. So this is supply. Uranium production is this shaded area. Uranium demand is this blue, this navy line going across. Now, until the 1990 even, we had more production of uranium than demand. So supply exceeded demand. And so we had all this inventory. So everything that's sitting on top of this line is your inventory, right? Uranium inventory that's been built up, above ground. And now what we're doing is the production has gone down below uranium demand, and we are literally, well, this is secondary supplies, but we're literally eating up inventory right now. And we're hearing from various interviews from Sprott or Justin Hyun or Uranium Insider that they are struggling to buy the Sprott Physical Uranium Trust is now starting to struggle to buy inventories of uranium to pile up. So the signs are there.
We're at the inflection point then, right? Between where I have my line looking backwards versus looking forwards. And as an investor, that's probably the most important inflection point is when your inventories get eaten up. And as your inventories get eaten up and people start to realize this, boom, that is it. That is the boom. And that's what I waited for. I waited for natural gas to get in this tight scenario. I wait for oil to get in the tight scenario. That's why I continue to watch inventories. Uranium's a lot harder because they don't really publish their inventories. It's a lot more, I don't know, secret market or however you want to call it. But I think we're getting closer and closer. I don't know how close necessarily we are, but we're seeing signs that things are getting tighter and tighter.
Yes. I mean, inventories can dry up, in my opinion, with uranium, inventories can dry up in no time. And the reason why I say that is the sovereign fund. Right now, if you look at the US, there's a problem in enrichment right now. So people are talking about enrichment. We don't have enriched uranium right now. And so that is where the government threw the money at, right? Next, so if you look at the entire fuel cycle, I mean, UF6 gas, SWU, all those things have skyrocketed because of the enrichment issues and enrichment capacity or lack thereof. Now, the end of that is uranium. And so when everyone figures out that they don't have uranium to secure supply of energy for the United States or for China or for Japan or Korea, these sovereign funds are going to build up strategic reserves, I think. I mean, and they've never done that before. And that could very, very quickly eat up any inventory that's out there, above ground inventory that's out there. And because there will be lack of inventories above ground, I think the developers in jurisdictions that issue permitting and licensing very quickly will be bought up by sovereign funds. And I think that's ultimately the end game to this uranium play, is that maybe with some of these names that I have, some of my core holdings, maybe I won't even have to worry about exits because it will just be bought out.
Yep.
And I think it's a pretty likely scenario that a lot of the names that I hold in the Namibian region, for example, will be bought out. I don't think I honestly don't think I'll have to worry about exits for some of these names because I think they've got a very high chance of being bought out by either India, China, or Korea, or anywhere else. So I think it's hugely exciting. This is unbelievable setup. I just think about this and I'm just like, I can't believe it. The best commodity in the world and the commodity that the human beings will need the most over the next decade or so is also the cheapest commodity in the world based on ratios. How can you get not excited over that, right?
Did you know, did you use ratios back kind of 5-10 years ago or not as much? Just curious.
Not as much. I mean, trading view wasn't big back then, I don't think. So it was harder. It's much easier now with all the tools that we have. So I used to do manual calculation in the Excel spreadsheets, for example. That's where I calculate ratio. So I didn't get a great view of the money flowing in, forming an arc and things like that. But I mean, it's definitely the biggest thing I look at right now. One of the biggest things I look at is the money flow using ratios because it's very visible in the chart. When the trend changes, it's yep, the money's flowing into this sector. So
good. You have anything else to add, Scott? Because I don't really have much. much else here.
No,
No, you're good.
no. Just that yeah, I mean Bible. Just share with you the Bible. And yeah, I mean one single statement: be joyful always. That's God. That's what God wants. He wants you to be joyful always.
Is it what God wants, or is it what Scott wants? Because it sounded like
That's
you
what
said it's
both of
what
us
Scott
want.
wants. Good, good. All right. Well, that's all I've got, guys. I think that'll kind of wrap it up. If you want to follow me, Finding Value on Twitter and the website. If you want to follow Scott, at @U_AG_ at Twitter, and then So and Read Capital. Thanks for coming on, Scott. Really appreciate it. Thanks everybody for making it. What should we say at the end of this video? What should they put in the comment section? We should put some. Scott, you want to put something? Be joyful or what? What do
Boom
you want?
shakalaka.
Boom shakalaka. Boom shakalaka. Put it in the comment section. Love to see that that you made it to the end of the video. All right, guys. We'll catch you later. Andy, Finding Value is out. See you, Scott.
See you later.